Let's talk about Hong Kong now. We've seen multiple headlines coming out from Hong Kong. None of them looks good though. Just take a look. Hong Kong universities shrivel in Beijing's grip. India overtakes Hong Kong as the 7th largest stock exchange. Hong Kong elections fall flat with record low turnout. And the latest one, Hong Kong offers bounties on overseas activists. These are all recent headlines. All of them tell the same story. Hong Kong is not what it used to be. It is on the decline. We'll start with the bounties. The latest headline, Hong Kong is seeking information about 5 activists. All of them live abroad. If the information leads to arrest, a reward will be given. How much? Around $128,000. Now, just to be clear, these are not drug dealers or human traffickers. We're talking about activists, people who wanted democracy in Hong Kong. They've already been driven out of the city. Many of them now live in the US or the UK. They face charges under the national security law. Both London and Washington have condemned the bounty, but Beijing says it is necessary.
By cheering on these anti-China individuals that are bringing havoc to Hong Kong, the United States and Britain are exposing their malicious intentions in messing up Hong Kong. What I want to emphasize is that Hong Kong is China's Hong Kong. Hong Kong affairs are purely China's internal affairs.
It's not just activists, though. Investors and companies are also fleeing Hong Kong, especially American ones. The number of US firms has fallen for 4 years in a row. Last year, only 1,258 of them remained. That's the lowest since 2004. Hong Kong used to be the regional headquarters for most multinational companies. It was the Asian nerve center, but not anymore. MNCs with head offices in the city have dropped 8.4%. That's from 2019 to 2023. These MNCs have also downsized. They've shifted around 30% of their staff out of Hong Kong. And where are they now? Mostly in Singapore. Same with investors and fund managers. Hong Kong's banks used to manage vast quantities of assets, but now assets under them are down by 15%. Wealth managers say inflows are down by 80%. Imagine that, an 80% fall in funds in 1 year. All of this has pushed Hong Kong's stock market into a tailspin. Take a look at this. This is how major indices have performed in the last 5 years. America's Dow Jones, up by 65%. India's Sensex is up 100%. South Korea's Kospi is up 24%. The Japanese Nikkei is up 63%. The UK's FTSE is trading 13% up. Even China's Shanghai Composite is 17% up. Now look at the Hong Kong index. 34% down. The only major market that is in the red. What does that tell you? Investors have lost faith in Hong Kong. They're pulling money out of the city. And why just investors? Even tourists are not visiting like they used to. By the end of this year, 30 million tourists will have visited Hong Kong, which may sound like a lot. But in 2018, 65 million people had visited. So this is less than half. So to recap, companies are pulling out, investors are fleeing, and tourists are staying away. I guess the obvious question is why? In one word, China. Let's take you back in history. In 1997, the UK returned Hong Kong to China. Back then, Beijing made a promise. Hong Kong would get 50 years of autonomy. They could keep their capitalism and democracy. It was called One Country, Two Systems. But China broke that promise. Most of the trouble started in 2019. That's when massive pro-democracy protests broke out in Hong Kong. China cracked down with an iron fist. They also framed a new law for Hong Kong, a national security law. It called for strict punishment for anything anti-China. Activists could be extradited to Beijing, election candidates could be banned, and critical media could be raided. Basically, one country, two systems was over. That was strike one. Strike two was the pandemic. China enforced zero COVID measures in Hong Kong, so MNCs were caught in a bind. They had millions of dollars flowing through the city, but one fine day, the government shut shop. So the companies realized one thing: Hong Kong is not reliable. They had to spread their businesses out. All of this led to Western sanctions. Just look at the city's chief executive. His name is John Lee. He took charge in 2022, but before that, he was Hong Kong's security chief. Lee played a key role in cracking down on protesters. So even today, he is sanctioned. He cannot travel to most Western countries, meaning he cannot lobby for his city abroad. No trade expos, no economic forums, not even official visits. Most business leaders point to a change in the atmosphere. In the 1990s and 2000s, Hong Kong was free. It was China, but not China. You could bring capital easily. Taxes were low. Surveillance was not an issue. And of course, China was not breathing down your neck. Today, that is not the case. Even foreigners are not exempt from the national security law, a law that carries the death penalty. Things are so bad, some business leaders carry burner phones in Hong Kong. They use and throw them away. That's the fear of Chinese surveillance. You can't do business in such a setting, which is why companies are fleeing the city. The question is, can Hong Kong recover? Well, the government is betting on Chinese help. Around 77% of their stock market's value is from Chinese companies. It's inching towards a monopoly. But the problem is, China is not doing any better. They have their own problems. So if you think about it, Hong Kong is the perfect example of China's toxicity. Things were fine until the city was autonomous. Once that ended, so did the growth. You've heard about the Midas touch. Well, this was the touch of death.